Hello, everyone. I'd like to welcome you today. We still have several people that are coming online, so we'll just wait literally 1 to 2 minutes, and we'll begin today's presentation. Okay, let's get started. I'd like to welcome everyone to today's educational webinar on the impacts of international trade on the U.S. biofuels market. My name is Susan Olson. I'm the Director of our Agriculture and Biofuels Products and Services here at Genscape. Today I have several of my colleagues with me that will be presenting and contributing to the conversation. We have Will Martin, Lead Analyst on Ethanol. How are you doing, Will?
I'm good, Susan. Thanks for the introduction.
Sure thing. And Dylan Mertz, who specializes in maritime shipping and renewable storage. Dylan, how are you today?
Excellent. Very happy to be here.
Great. All three of us are here in our Louisville headquarters in Louisville, Kentucky. And then we have with us also Ken Copenhaver, who's a specialist also in maritime shipping and in agriculture. So Ken hails from Tampa, Florida. So Ken, how's the weather down there in Florida?
It's very nice today. These are the 6 months that we get to enjoy. Thanks.
Right. Great. So that's the presentation team today. Just some running rules. We would invite you to ask questions throughout the webinar. So there's a questions tab as part of this platform. Please ask away. Your questions will be treated anonymously, and we'll address them at the end. And if sometimes we have a lot of questions, so if we don't get to your question at the end of the presentation, we'll follow up on a one-on-one basis. Just so everybody knows, the final version of the slides will be made available to everyone that is registered for today's webinar. Also, I think that you can, we just found out, I think you can download them from this platform. So if you'd like to do that, then feel free to do so. Okay, so I'd like to give a brief background on our company and its relevance to renewable fuels. Just one slide. So Genscape's mission is to bring better transparency to markets by providing better monitored information. So we actually use proprietary monitors to go out and monitor infrastructure related to energy and commodities, and then we provide that information to our clients who form the markets and industries around these commodities. So in the biofuel space, we have several products and services that provide this proprietary, meaningful insight on a frequent, very granular level. And many of those are listed on this page. Today we're going to be highlighting insights that we gain from our research and real-time measurements in the biodiesel and renewable diesel imports monitor, as well as the global ethanol monitor, which includes data not just from maritime shipping, but also from our storage inventory measurements. So this is how the presentation will go today. We'll be splitting our coverage into fuel types, starting with biodiesel and renewable diesel, and then finishing with ethanol. And before we get started into the fuel types, we wanted to share some context on how we do what we do to track vessels, since maritime shipping is going to be a large part of today's presentation. So Genscape actually uses its own proprietary network of sensors to track ships around the world. Through its acquisition of Vessel Tracker, Genscape hosts the largest network of AIS antennas worldwide. We'll produce this snapshot that you're looking at here today of all the ships that we tracked last week that could be related to ethanol shipments. So the context is similar for biodiesel and renewable diesel. So Will, I'll flip it over to you and talk a little bit more about how the technology and the process works.
Great. Thanks, Susan. So as Susan mentioned, this is just a snapshot of what the location is going to look like coming from these AIS signals. And this particular snapshot was captured based on a list of vessels that we were watching from after they had entered an electronic boundary at known ethanol exporting berths in the U.S. So these aren't all ethanol exports, but there are ethanol exports in this bunch. And this just goes to show you like one of the main technologies that we're using for these import-export products. And it's just an example of how Genscape as a company is all about going out there and collecting our own data and not just regurgitating the other data that's out in the market.
Sure. And it sounds like that the report tries to be more inclusive than exclusive.
That's right.
In terms of vessels.
We start with a wide net and then narrow it down as more intelligence becomes available.
Great. Okay, well, thanks, Will. So without further ado, with that context established, I'll get us started talking about biodiesel imports into the United States. So we'll start the conversation with trends from 2015, and then we'll finish with forward-looking expectations for the remainder of 2016. The table that you see there shows biodiesel supply by source under the U.S. Environmental Protection Agency Renewable Fuel Standard Program, or RFS. You'll see two types of imported biodiesel listed there. The D4 and D6 are Renewable Identification Number, or RIN codes, for different types of fuel that are qualified under the Renewable Fuel Standard. So RINs are basically the compliance mechanism for parties that are obligated to blend renewable fuel into the motor vehicle supply. So they're kind of like the currency of renewable fuels for this program in the United States. So D6 type is a more general renewable fuel, and D4 is very specific to biomass-based diesel produced through certain regulatory pathways. So biomass-based diesel producers that use feedstocks other than these standard pathways, such as palm oil, had an opportunity to grandfather in their pathways under the renewable fuel standard based on a facility construction date cutoff. So these grandfather pathways qualify for D6 generation. So I just wanted to point out that there are two different types of pathways represented there under the Renewable Fuel Standard Program. And if you look at how the 2015 then breaks down by supply source, a little more than 20% of biodiesel is imported for the U.S. supply. The majority of that is about 75% of the 20% is imported D4 biodiesel, while some of it is D6. Some other notable things. The total was about 1.6 billion gallons of biodiesel supply for the United States in terms of the total. And as you can see, about 335 million gallons of that was imported. And if you look at trends, recent trends, so comparing 2014 here and we'll show 2015 as a pie chart, this basically shows all of the RFS biomass-based diesel contributions by source. So this includes biodiesel and renewable diesel, just to compare the two. This section is focusing on biodiesel. We'll focus on renewable diesel in the next section. So you can see that the EIA just recently indicated that 2014 and 2015 domestic production in terms of gallons was about equal, although the total supply in 2015 was actually larger altogether, counting imports. So you can see basically from 2014 to 2015, the big contrast really in supply was that imported biodiesel took some market share from domestic biodiesel on a percentage basis, about a 6% larger market share of the total supply in 2015. And so the slides that follow will start to explain that increase. Since 2013, imports have been much more substantial into the United States. So core factors that have influenced those imports include an increased mandated renewable fuel standard volume of biomass-based diesel. Also, California's low carbon fuel standard program increases that incentivize and demand renewable fuel blending in that state. Also, foreign exchange rates, especially recently, and the existence or non-existence of the blender's tax credit on a forward-looking basis. So the blender's tax credit is a $1 tax credit available to parties that blend biomass-based diesels. And so usually that tax credit is in some way, shape, or form commercially split by the producer of the renewable fuel and also the blender. So what this chart does is it looks at years where the tax credit was forward-looking, which are represented by green bars, and years where the tax credit was not forward-looking, which are represented by black bars. And the reason why we talk about forward-looking is that often in the history of the biomass-based diesel tax credit, that it has been reintroduced retroactively at the end of the current production year. So for instance, in 2015, the biodiesel tax credit was not in place, and so it wasn't forward-looking, but it was reinstated at the end of 2015 and then implemented retroactive back to the beginning. And in 2015, it was actually established on a forward-looking basis for this year, 2016. So you can see there that the different patterns that emerged with and without the tax credit, and there was also some differences that impeded imports in 2014, and we'll get to some of those detailed factors as we start to talk about imports by country. But the thing to note here, 2015 was a very strong year for imports. As a matter of fact, it was a record year for biodiesel. So moving on to other sources of biodiesel and looking not only at the past, but looking, kind of now starting to look at forward-looking, you can see the contributions between 2013 and 2015. Argentina is the dominant importer into the United States, while imports from the EU have virtually disappeared. We've seen some moderate growth between those two big import years between Canada and Asia. And just to talk a little bit about Europe and what's changed since 2013, this is a quote that's actually taken from a recent an FAS gain report, Foreign Agricultural Service, which is a division of the USDA. The EU really is focused on self-sufficiency with its renewable fuels. Maybe some of that is actually due to the anti-dumping duties that the EU has effectively separated itself from the international market. So those anti-dumping duties have been imposed on countries like the United States, Indonesia, and Argentina. So there's not a lot of export coming out of Europe, and we wouldn't really expect that to change in 2016. Occasionally we'll see a shipment from Germany of biodiesel, perhaps the Netherlands sometimes, but it's more of an occasional thing than rather a major contributor to the import picture. So looking at a more granular level at sources of biodiesel imports, and this will kind of set us up for talking about expectations for 2016. Basically, the Rosario and San Lorenzo area of Argentina is where most of the imported biodiesel comes from. So the biodiesel facilities in that area of Argentina were built in conjunction with massive soybean processing operations, and those biodiesel plants are built specifically for export. So Argentina also has a biodiesel blending mandate, but much of that mandate is met actually by facilities on the interior of the country. Argentina, like I said, also has that blending mandate, but we see contributions from other countries as well. So Indonesia, Canada, South Korea, and others also contribute to imports to the United States, and you can see the relative percentages there. So the next slide is going to discuss more specifics about those major contributors, Argentina, Canada, and Asia. So this basically shows the U.S. biodiesel imports from Argentina year over year and the factors that have influenced the ups and downs in those imports. So in 2013, we talked about the EU anti-dumping tariff initiated when we talked about Europe. Well, that also impacted the United States in terms of the imports that we received from Argentina, because basically a lot of the Argentinian biodiesel had come into the EU, and with that anti-dumping tariff initiated against Argentina, then it opened up the U.S. as a market for that biodiesel. Also in 2013, the $1 U.S. blender's credit was in effect in a forward-looking way. So if you then go to 2014, the blender's credit was not in effect, not forward-looking. There also was no set renewable fuel standard volume obligations. The EPA was late getting those out. So basically, in 2014, it was a rough year for bringing biodiesel into the United States, and it also was a pretty tough year domestically. So then in 2015, things start to change for Argentina. So you have a trade association, Carbio, that has a soybean tracking program for surveying soybeans to make sure they meet land use requirements. That survey methodology was accepted by the EPA, which helped open the door to a more streamlined version of compliance for traceability tracking for the soybeans for Argentinian biodiesel producers. So in addition to that, the renewable fuel standard volumes were established, and they were actually increased on a year-over-year basis. You see a $1 U.S. blender's credit that was retroactively applied to 2014, and then 2015. The Argentina lowered its export taxes on biodiesel, actually. Those changed frequently by the government of Argentina, but they were at a historic low for much of 2015. And then another thing, you can see the increase from 2014 to 2015. Another thing that impacted that was that diesel prices effectively plummeted. So typically when diesel prices are bring that back up there. When diesel prices are higher, then there's discretionary blending of biodiesel coming from Argentina toward North Africa. With diesel prices where they are now, that is actually that arbitrage is closed, and so basically you have or that economic window is closed, and so basically you have the U.S. as one of the few destinations that makes Argentinian biodiesel economical for those particular plants. So what are our expectations in 2016? So many factors are set to drive further growth of biodiesel imports from Argentina. Again, you've got the blender's tax credit that's forward-looking. You've got the renewable fuel standard volume obligations that have been increased by 170 million gallons for biomass-based diesel between 2015 and 2016. Diesel prices continue to be too low for exports to North Africa. And then the entrance to the Carbio survey program that we talked a little bit about in the last slide have been implemented so that those facilities have had some experience in the compliance. So all those are factors that are set to drive further imports. There are always some factors to watch, and I'd be remiss if I didn't point those out. So the government of Argentina has actually doubled biodiesel export taxes according to some recent news articles, and that happened in February. So it's still pretty low, but not as low as it has been in 2015. So there also are certain limits to the amount of available soybeans that qualify for the Carbio survey. So based on discussions with industry sources, they suggest that there's still room for growth in 2016, but that supply is certainly not limitless. So also, keep watch for any changes brewing in the EU anti-dumping tariff. Usually those policy changes take a long time to make, but certainly that could change the landscape. But based on what we're seeing right now and talking to the industry, we would expect growth of 20 to 25% in having those conversations. So expectations of somewhere between 230 and 240 million gallons if these growth expectations are met would come into the U.S. from Argentina in 2016. So 2015 was about 190 million gallons, so you could see what the growth would be there. So what about other biodiesel import sources? So we spent some time talking about Argentina, now let's talk about Canada. So there was steady growth in imports from Canada from 2009 to 2014. Something to note is that U.S. imports of Canadian biodiesel are in large part balanced by our exports to Canada. It's just a matter of geography. So the RINs and the blender's credit do create an incentive for exports from Canada. That's imports to the U.S. However, those are going to be limited by production capacity. So there was a plant capacity was added in 2014, and you can see some increase there in U.S. imports from Canada. But no plant capacity has been added since then. And already those plants are operating at a very high level, so about 29%, about 95%, and then about 95% of the biodiesel produced in Canada is actually being exported to the United States already. So, and there are other limiting factors such as feedstock costs that may prevent access to that small remaining amount of capacity. And that's this is based on some information that we've obtained in part from the USDA gain reports. So I would say in general, growth expectations are pretty limited from Canada. We'd expect similar imports in 2016. So reasonable expectation would be, 65 to 70 million gallons. And then in Asia, so big contributors are Indonesia, Korea, and occasional shipments from Taiwan and Malaysia. So receipts from Indonesia, which is the main source of the D6 category biodiesel, have grown. You can see there in 2014 and 2015. You can see by the orange bars there represent the imports on an annual basis from Indonesia. So these typically go into the Gulf Coast. So not a lot of these see the low carbon fuel standard benefit. But it's not atypical to see monthly or semi-monthly shipments from South Korea into California. So these typically come into Long Beach or LA. Like I said, it's not unusual for an occasional shipment to come in from Malaysia or Taiwan, but that's more of like on an annual basis rather than a monthly basis. So LCFS credit prices increases and increased demand would tend to incentivize more shipments from South Korea. I think those same the factors of the RIN and also the blender's tax credit would tend to create a more favorable situation for imports from Indonesia as well. And then you also had a new renewable fuel standard producer registered in February 2016 in Hong Kong with 30 million gallons a year of capacity. So all of these things really point to potential increase in imports from Asia. And kind of like summarizing this, I think fair expectations for 2016 are a 20 to 25% increase in imports from Argentina, nominally the same volumes as last year from Canada, and a potential increase from Asia, possibly in the low tens of millions of gallons. So last year there was a total of about 335 million gallons imported of biodiesel, and so it would be realizable in 2016 based on these factors to see about 400 million gallons come into the U.S. And this is just an estimate very early in the year, but based on the factors we're seeing in discussions with the industry, that seems certainly realizable. So now that we've set the backdrop for 2015 biodiesel imports and set some expectations for 2016, let's look and see what's happening very recently, and we'll use the Global Biodiesel Monitor to do that. We're going to pull it up here. I know, again, it may be a little bit blurry to see the report, and its PDF form is quite clear, and also the slides that you'll get. So Ken, you and Will put this report together, and so I was just going to ask you, what are you seeing currently in the biodiesel import space? We have a segment of the yesterday's report here. Just going to ask you kind of some of the things you've been seeing recently, and since we've actually been putting together this report over the last several months.
Yeah, thanks, Susan. So these are vessels that are on the water or getting close to being on the water that we're saying are likely U.S. imports. Some of these vessels will drop off the list for different reasons. For instance, the birdie trader that was coming from Indonesia has been removed from the list because it declared Spain as its destination this morning. The Navigate Amber was removed from the list because we found that it was actually not heading to Argentina. It was heading from Trinidad with methanol through the Panama Canal. So there are adjustments in this every day, but what we are seeing is a definite uptick in the Argentina imports. We're looking at about 70,000 metric tons that are coming in this month. It takes Argentinian vessels about 3 to 4 weeks to get here, so what we're seeing in the water now is probably what we're going to see for March. So that's about 24 million gallons that should be coming in March, which is a pretty nice number for March. And then we expect to see, we have one other Indonesian vessel that could possibly be coming to the United States. It hasn't declared yet. We have our usual renewable vessels coming in. We have 2 expected into the West Coast in March, and we have a third that's kind of an interesting vessel in that it's declared Boston as its destination. It did stop in Durban, South Africa for a day, but we didn't really see a draft change, so it's possible it was fueling or had some other reason to stop in South Africa. And then we have a couple of vessels that we're watching closely from Vancouver and South Korea also to see if they bring anything in during March.
Sure. That's a pretty thorough update for March, and it's only the 3rd day of March, so it's pretty cool that you can give that kind of that update so early. It sounds like things do change a lot, and I know you and I were talking a little bit yesterday, kind of about some of the Port Authority sources, and maybe you could elaborate a little bit about what we've learned from those sources and why this kind of real-time tracking is important.
Sure. So different ports have anything from zero transparency, where there's absolutely no list of vessel information, to very detailed information. And Argentina is one of those ports that does give a lot of information on the vessels that are arriving, expected vessels, what their potential cargo is. But it does need to be understood that those are expected and can change. A lot of the vessels that we have listed as arriving in Argentina with plans to transport biodiesel to the U.S. Had a big delay in the amount of time when they were scheduled to load and when they actually loaded. I mentioned one of those actually didn't load at all.
Mm-hmm. That
vessel this morning was actually the tons that were expected for that vessel this morning actually went to another vessel, and we were able to pick that up right away. But yeah, like Dumai, Indonesia doesn't have any information on the port. Argentina is pretty transparent on their port information, but typically, even with that information, there's enough question marks and enough inconsistency that we need to do a lot of additional checking before we feel comfortable putting out the numbers.
Yeah. Okay, great. And so I think you cover the expected shipments. I mean, the only thing we pull up here, the shipment confirmation is the one that we've had for January and February of this year. And maybe you talked enough about this, but I mean, is there anything else you wanted to say about how the beginning of this year looks comparative to others?
Well, sure. So these are vessels that have been confirmed. We have our own customs data. We don't use Panviva or data mine or any of the other companies' peers. We get the data straight from customs ourselves. So we get that information very early. We have vetted that data so that we know all the different names for biodiesel as it comes in, which can be quite interesting. And so we're able to get that information, confirm those shipments as they come in, or confirm that those shipments were actually not carrying biodiesel. Maybe it's glycerin, or maybe it's palm oil. And then we put that information into the list that keeps track of previous shipments. We compare that to the EIA data as it comes out 60 days later. We compare it to the ITC customs database as it comes out 30 days later, and see if we need to make any adjustments, see if there's any shipments that we missed or shipments that we included that we shouldn't have, reconcile those different numbers. And really what we've seen for January and February is slow, as you'd expect. And I think you alluded to it, they're usually not big import months, and we certainly saw that this year as well. Right.
Okay, great, Ken. So it sounds like, putting together this, the own source of customs data with the scrubbing that you applied, doing the benchmarking with any available government sources, and then, of course, the proprietary aspect of the real-time monitoring really produce these very accurate estimates and timely estimates of what's coming into the U.S.
Yeah, it's a combination of all those different sources that allow us to have what we feel is a very accurate report.
Got it. Got it. Okay, well, thanks a lot, Ken, and I know you'll be talking a little bit about renewable diesel here in a minute. Before we move on, I just want to give a quick reminder, feel free to submit your questions anytime during this presentation using the website, and we'll answer them anonymously at the end of the presentation. We'll work to get to as many as we can. We had a few roll in even before we officially started. We love to see that, so it's very great to have your topics of interest so that we can cover those at the end. Okay, I'm going to move through this fairly quickly so we can get on to make sure we have plenty of time for the ethanol part of the presentation. But I wanted to give specific attention to renewable diesel. So if you look at the renewable diesel supply under the Renewable Fuel Standard Program, again, we have it broken out here by the domestic supply coming from two big facilities here in the United States, Diamond Green Diesel and the RAG Geismar facility. And then you have the imported segment. So you can see that domestic renewable diesel is about a third of the total supply, and then the other two-thirds that are listed in terms of the Renewable Fuel Standard Program are coming from other imported sources. So basically, if you look at the facilities that are qualified to bring in renewable diesel for the Renewable Fuel Standard, the domestic facilities are listed there. All the facilities that are registered are listed. The ones highlighted in green are ones that Genscape knows to be active producers of renewable products. So you have Diamond Green Diesel at the top, RAG Geismar at the bottom there. Those are two domestic producers. And then the facilities that are registered for importing into the United States under the program are all nested facilities. The majority of the product that we get into the United States is actually from the Singapore facility. So contrasting the Renewable Fuel Standard data with the U.S. Customs and EIA data, we do see some differences in what those reflect. So the Customs data and the EIA data both reflect about 200 million gallons of total renewable diesel imports coming in last year from Singapore. But the Renewable Fuel Standard Program indicates about 340 million gallons of renewable diesel production slated. So there is some timing difference there because the nested facilities can actually generate RINs because they're a foreign RIN generator. So it could be that RINs are generated before the imports actually happen, and RINs could be later retired if the imports do not happen. The other thing that we're finding is looking at some of the aggregated customs data shows additional products coming into the United States from Canada and other countries under the same broad HTC code, which is a product categorization code that's used for renewable diesel. So there's a lot of stuff under this code, but also renewable diesel is there. And so we see some of this coming to the United States from Canada, and actually we did some more digging. We see that coming to Canada via rail, so it would indicate something coming in bulk. So those imports could be originating not from Canada, but from other countries that are bringing it into Canada, and then it's coming to the United States by rail. So we still haven't completely unraveled what the differences are between the EIA and the EPA data from the Renewable Fuel Standard Program. But certainly using our biodiesel ship tracking is going to bring the transparency to help resolve the physical supply coming to the United States, and we can also see where the shipments go from the different nested facilities and where they actually land, watching the ships that are going from the ports of interest. So if you look at the arrival locations of the U.S. imports of renewable diesel, about 80% of the shipments that come directly from Singapore comes to California. So it's definitely taking advantage of the low carbon fuel standard credits, as well as the RINs and the blender's tax credit. The blender's tax credit is also applicable to renewable diesel. So if you look at the U.S. Census data, the EIA data, and the LCFS data, you can see that those factors, all those different data sources line up very well for the reported renewable diesel imports coming directly from Singapore. So forward-looking factors for renewable diesel. The image, by the way, you see there is actually one of the shipments that Ken was referring to that we're watching that's headed from Singapore. The name of the vessel is the Ardmore Dauntless, so it's leaving the Nessie area ports and likely renewable diesel shipment that we're tracking carefully. The orange charts you actually see below the image are graphical representations of the speed and the draft of the vessel. So looking forward, there's not a lot of room for production and supply increase for renewable diesel imports. So the Neste facilities are the only ones registered under the Renewable Fuel Standard program, and I believe that may be true for the LCFS program in terms of non-U.S. production. And the financial reporting from Neste actually indicates that the three of those facilities are running at an aggregate of 94% of their capacity. So that's very high capacity utilization. The 2015 split for product sales was 31% to North America and 69% to Europe, with a 4% shift towards North America from 2014 to 2015. So the economics could potentially shift more product to the United States with the blender's tax credit reinstatement, RFS mandates, and the value of the LCFS credits. But I think that, and we'll continue to, as part of the forward-looking part of this, continue to resolve the physical supply into the United States by actually using that renewable diesel imports monitor. Just before we leave this topic, and you can see that in 2013 and 2015 that there were very similar volumes of renewable diesel arriving directly from Singapore. So, in short, I think what we would expect is something very similar as what we saw last year in terms of renewable diesel imports. There are definitely economics. The blender's tax credit being existent on a forward-looking basis in 2016 when it wasn't in 2015 creates additional margin to the baseline margin for that renewable diesel. However, you're going to see limitations to the production capacity, the feedstock availability that's qualified for certain programs. So I would say increases would be expected to be modest unless there's a substantial change that would divert volumes from the EU to the United States. And we'll be watching for that in terms of what we're doing with the Global Biodiesel Monitor. So Ken, I thought I would just, again, flip it back to you to say, what are we seeing so far in 2016 in renewable diesel? I think you talked about that a little bit in terms of the vessels that have come in, but looking here at the January and the February data, anything different this year than last year, or is this kind of on pace?
Yeah, I think we're on pace this year. We had a vessel come in January, one come in February, and then we've got a couple on the water headed to California as expected, and then that vessel is headed into Boston, which could be interesting.
Yeah, it was interesting in putting together statistics. I know we had seen shipments to the Northeast, but I was kind of surprised by the amount that came into the New York Harbor area, for instance. I think it was something like 16% or so we showed in the last slide. So, it seems like that there are other destinations that are needing this other than California.
Yeah.
All right. Well, we'll move on now. Will and Dylan are going to talk about ethanol exports and imports. Just a quick reminder again, if you have any questions, please put those into the question and answer part of the platform. And Will, I'll turn it over to you and let you take it away from here.
Thanks, Susan. And in addition to submitting your questions, I also wanted to bring to all the listeners' attention that at the end of the presentation, there will be a very short survey that we really appreciate if you all will fill that out. So jumping into sort of just 2015, the year in review for ethanol exports, overall it was another really big year, very similar to 2014, which were both higher than previous years and pretty much tied for the second highest year in U.S. ethanol exports. The total was roughly 20 million barrels for the year, or about 836 million gallons. And that ends up being about 6% of the U.S.'s total production of ethanol. Some of the interesting factors was, the amount of, not just the economics, but the amount of effort industry groups were putting on exports as an opportunity and really expanding the market outside of where ethanol had been traded before. So, not just Brazil and Canada, but this year we saw ethanol going to 76 countries, with Asia in particular becoming an increasingly important destination. So looking at that pie chart to the right, you see that Canada obviously maintains a large share, but is no longer around the 50% range that it used to hover at. The big story for the year there is China becoming a huge part of the ethanol market in the U.S. And I'll get a little bit more into that in these coming slides. Another major shift that's been happening in the last couple of years with those is that between the U.S. and Brazil in terms of global ethanol trade, the U.S. is increasingly taking a larger portion of that. So whereas you used to see Brazil over that 50% mark of meeting global demand, now the U.S. is sort of taking that reign. Here you just see this broken down monthly in terms of total U.S. ethanol exports. And you can see that it's fairly really consistent over the year. But what really shifts are the destinations, and that's what I'll bring up in the next slide. And you can see here that Brazil started the year as a major destination, but imports to Brazil can be pretty cyclical, and so that's what we were seeing there. Canada is always a major destination and always remains relatively flat. It's pretty similar with South Korea and the Philippines. They're major destinations that stay pretty consistent. And then towards the second half of the year, you see the major shift, which is China, especially in October, where China took up like the largest portion of ethanol exports. So looking forward to 2016, some of the things that we'll be looking for, and I know a lot of you all will be looking to, are what's going to happen with Chinese demand? Was that just a blip at the end of the year, or will it continue to remain a major destination for U.S. ethanol? We know as of January, exports to China have dropped considerably, so it'll be interesting to see if that January was unusual or if that's going to be the trend. Obviously, towards the end of this year, margins have become increasingly tight with U.S. ethanol producers. So what happens to corn prices and what happens to fuel prices as well are going to be major factors. And along with that, you have discretionary blend rates that people will be looking at. As the price of oil is so cheap, ethanol is not as attractive as an option anymore in terms of an octane booster. So when oil-based octane boosters start to be cheaper, that's not going to be good for the ethanol industry. And then just overall fuel demand. Obviously, if ethanol's 10%, for example, and there's just not as big a demand for fuel, that's going to have a major impact. And that's one of the things that people are worried about with China. If their demand starts to slow, what will happen there? And then government mandates. So will what's in effect stay in effect? Will countries like India start to fulfill their mandate? All of these are major factors to look forward to in 2016. And this is really why we think there's a need to bring additional transparency to the market. Because a lot of this information is often a month or 2 months delayed. So I just put up here an example of the kind of intelligence that we're bringing to the market with a specific shipment. So had you been looking at public data and trying to figure out what was happening with trade to the Philippines in December, you would have had to wait pretty much till February to know what happened in December. But we're watching exports at the berth level. And so in this example, we saw in Vopak Deer Park a vessel enter and its draft changed. And we knew it was a full load, and that load was roughly 200,000 barrels. And then as soon as January 5th, we knew that ship, which was likely loaded with ethanol, was heading to the Philippines. So we had a very clear indication of that export activity. And it just so happened that 200,000 barrel level was a very close match to what ended up coming with the EIA data. And so with that in mind, Dylan is going to go into a little bit of what's currently happening with our monitoring of global ethanol exports.
Thank you, Will. With our global ethanol monitor, we see the marriage of many different technologies within Genscape. So there's vessel tracking through Genscape's vessel tracker, the use of our own U.S. Customs database, and what you can see here is our proprietary storage monitoring. So through analyzing the storage activity at the terminals of interest, we can better understand the movements of ethanol and indicators surrounding import and export activity. Some tanks exhibit volatile use patterns that indicate that they are used for export, and large builds like this one here can indicate that an export event is going to be happening soon, and large draws here can show us that an export event has occurred. And these are the most obvious of indicators, but statistical analysis over time can unlock even more interesting correlations that we're not going to get into today. So we see here an example of our global ethanol monitoring report. This is the watch list highlighting last week's observed vessels. You can see from left to right, the vessels are sorted by the storage week, then by the terminal. And beside the terminal where we have storage information, you can see bulk draws observed during that week. The goal of this table is to be able to narrow down the observed vessels list to match the observed draws. And we do this in the vessel tracking process by removing vessels from the list that are determined to not be carrying ethanol. In this example, you can see 43,000 barrels of draw from oil tanking and 53,000 barrels of draw from Vopak during the week of February 19th, ending in February 19th, which could amount to 1 or 2 shipments each. An interesting example on this slide is regarding Vopak Deer Park, and I apologize if you guys can't read this in the presentation, but you can take a look at it by downloading the slide stack. I believe there's a button on your screen, on the top of the screen, or we'll be sending it later. But regarding Vopak Deer Park, through our storage monitoring, we observed 53,000 barrels draw from the terminal and 12 vessels that were observed to berth there during that week. However, in the notes column, you can see that we confirmed from the port of Itaqui in Brazil the receipt of 24,000 barrels of ethanol from the vessel Chemical Aquarius. This represents nearly half of the observed draw, and the remaining volume could be on one of these other vessels or could be unloaded at another port by the Chemical Aquarius. As for terminals that we don't have storage data, we're not in the dark. We can still make certain assumptions that refine the potential delivery list. And some of these criteria can be seen to the right of the table, where we rank on different categories what the potential for these vessels to be carrying ethanol or to be good candidates for carrying ethanol. So for example, here in this week we have there were only 2 vessels that visited Kinder Morgan Harvey, and we know this terminal to be typically receiving edible oils and exporting ethanol. So we watch closely any vessel that appears to have loaded at this terminal. And on this sheet, we are watching the vessel Cavatina, which is observed to have loaded while berthed there. And you can see the rating for the category of loading over there is a 3 for Cavatina. In the loading category, a 1 would be the vessel unloaded while at berth, 2 would be there was no observed change, and 3 or 4 are different levels of observed loading. So an interesting slide here shows that the vessel I just mentioned, Cavatina, is waiting in line to enter the lock in the Panama Canal. On the left side, we have a view from Vessel Tracker of the vessel identified in a little box. And then on the right side, we have the view from the Panama Canal webcam of observing the vessel as it passes through the lock. We often see, and this is an example of what we often see, is that vessels leaving the Gulf will initially state a destination that is intermediate to the actual destination. So these would include Gibraltar, Port Said, Egypt, and the Panama Canal. But through our monitoring of all the watch-listed vessels, we update the destinations and reassess the vessels once they pass through these intermediate destinations. We were hoping to be able to update you on the status of Cavatina during this presentation, but it still is waiting outside the Panama Canal. But these updates...
and sorry, Dylan. Go ahead.
Okay. I was going to say, these updates will continue until we've determined that the vessel has delivered the cargo, has completed a trip, which typically means they've started to reload, or they have returned to the U.S., or in the situation that we determined that they're not carrying ethanol. So, Susan?
Sorry, Dylan, I thought you were wrapping it up there. I was just going to say, Will and I were just having a brief conversation earlier. I know, Will, you were talking to some of the other maritime colleagues here about, sometimes these ships get held up in Panama.
Right, yeah. So, often they're held up before they enter the canal just because of a long backlog, and that's pretty common. It's a little uncommon for them to be held up afterwards, but there are various reasons why. It could be mandated crew leave or someone sick on board, or it could be something happened with where that ethanol was supposed to go, and so whoever owned the cargo is having to find a new destination. So whatever the situation is, it's never it's never great for the cargo owner to be sitting on that much product without it moving anywhere.
Sure. Okay, thanks.
Yeah, so from here, I'll jump in quickly to imports, and I'll go through the summary of this pretty fast because I want to get into questions. And again, if you have any, please submit your questions with the Q&A section. So 2015, like the year before, was another relatively small year for imports in the U.S. It made up less than 1% of consumption. So we've come a long way from the days where the U.S. had years where it was a net importer. It's hard to ever see that flipping again. But I think where the interesting picture is here is if you zoom into the monthly level and you see what's happening at the pad level, and where Pad 1, especially New York Harbor, used to typically be the major destination for ethanol imports. That has definitely shifted in the second part of this year, and you see a considerable amount of Brazilian ethanol heading into California. And I'll go ahead and zoom in here so where you can even see some of those specific destinations. And this isn't the full year, by the way. This represents, I believe, the last 3 quarters of the year. And so you see Los Angeles is the biggest port for receiving that Brazilian ethanol this year. And obviously a major player in this is the LCFS market and the price of those LCFS credits. So that's going to be one of the big factors looking towards 2016 is are those LCFS credit prices going to keep encouraging imports into California? Right now, that it's unclear if that arbitrage window is still open, just based on how much more expensive Brazilian ethanol is at the moment. But who knows where LCFS credit prices are going? We've seen them jump from $40 to $120 already. So there is the potential to see a lot more heading into California. And for what it's worth, when you look at the data from the Air Resources Board in California that runs the LCFS program, they do plan on a lot of Brazilian ethanol heading into the state, and that's how they see, especially in the first few years, the companies meeting the mandates. So it'll be interesting to see if they're right on that. And again, I'm going to just pass this over to Dylan really quick to give an example of how we can look at imports with some of the products and technology that we have available.
Right. We have an example here of the first ethanol import of the year, the Freya Maersk, which we observed through port data, the port of Santos in Brazil, to have loaded 20,000 barrels of ethanol, and afterwards to state the destination of Houston, Texas. So it was a kind of early indicator of import, many weeks before it actually arrived. And we arriving on January 24th, we observed a draft change that indicated that it did unload at Vopak Deer Park, and then later this was confirmed through U.S. Customs. And this represents the future capabilities that will be able to eventually become a part of the global ethanol monitor. So that's all we have to present about ethanol imports and exports right now. I'm going to hand it over to Susan, and maybe we can address some of these questions.
Absolutely. No, so we've gotten great questions that have come in, and don't hesitate to still send them out there. So we'll spend the next 5 to 6 minutes answering these great Q&A. So I know Will, both you and I saw the first question come through. The question is, Brazilian ethanol exports to California have recently declined, and that's something that you pointed out in your presentation. To what extent do you think this has driven the spike in the LCFS credits in California? In other words, has the absence of more Brazilian ethanol actually, inflated the price of the LCFS credits? And do you think that future imports from Brazil will cap those prices in a significant way?
Right. So I think it really depends on what the price of the fuel itself ends up being. Because right now, I don't think, even as high as it is, I don't think LCFS credit prices are high enough to encourage a huge flood of Brazilian ethanol into California. So it looks like, and what I've been hearing from traders is that, they're pricing up LCFS credits as if there's going to be a shortage in the near future. So I don't think they're seeing that wave of Brazilian ethanol coming quite yet, but obviously that could change. And I think the person brings up an interesting question of what that would do to the LCFS market. And I believe they're right in the fact that once it's that arbitrage window did open up, I think it would start to kind of create a cap with the LCFS credit prices.
Got it. No, that's very helpful. And on one of those notes, another question about kind of LCFS, and I can take a crack at this one. It said, what is the expectation for biodiesel and renewable diesel imports in both volume and countries of origin into California, given the current high price of LCFS credits? I think that, I think that basically what we saw last year, could be mimicked in proportion in terms of what comes into California. And actually, we had some supplemental material here that wasn't part of the main presentation, but just to give you an idea, here's the pie chart that shows different arrival ports where biodiesel comes into the United States. And the vast majority of, not the vast majority, but in terms of the area, the biggest area, or the country that receives the most is actually Houston area. And then you would see the New York Harbor being second, and then, starting to split up between California and some other areas of the country. So we didn't see even though we saw LCFS credit prices go up, quite a bit last year. You still saw, Houston be the top destination for biodiesel. There is some that comes into California, as we showed, like from South Korea, for instance. So I would expect, those things to be pretty similar in 2016. And then, most of the renewable diesel comes into California. So those renewable diesel shipments from that are coming in directly from Singapore, we would expect those to continue to come in at probably the 80% rate. You could see a shift there. It could be more like 100% coming in. But in terms of the gallons, I think you would see something similar to last year, and also the proportions to be very similar to what you saw in 2015. Going through the questions here, one of the questions was, can you track the international plant of origin of United States imported biodiesel and renewable diesel? So Ken, I thought maybe you could talk a little bit about how you go about actually tracking those vessels and kind of use the point of origin to start that process.
Sure. So the first thing that we do is we are watching berths that have exported biodiesel in Argentina in the past. So those berths are, a lot of those are along, next to the factory. Others are more of a generic berth. So we can get some information often from the berth where it's exported, and we do include that information in the biodiesel monitor. And then, of course, with the customs data will give shipper information, consignee information, and that sort of information you can also glean as well. But it's not required that information is provided in any sort of a format that we would be able to establish it. It's based either on the berth where it's shipped out or any information from the customs data.
Got it. Because another question that came through was basically saying, so in other words, you're getting a lot of locality by, we're saying, hey, we're tracking these berths because they belong to, Neste, or they belong to XYZ shipper, and then the rest of it that we could obtain some of that from customs data. One of the questions about, and Will or Ken, and I think the answer is probably no, but the question was, can you basically track the origin of ethanol exports back to the facility? So in other words, could you track it to a U.S. producing plant? And I think things get pretty aggregated once they get to Houston, Louisiana, but I just wanted to see if you had any other insight on that.
Yeah, I would agree with you, Susan. I think where biodiesel and renewable diesel is a kind of sometimes maybe, ethanol is almost never, and that's simply because that can get aggregated even before it reaches the port. They might be loading a unit train somewhere where ethanol from various plants will be joined together. So you might be able to tell the company up until the point it reaches the port, but even then, it's all very aggregated and would be hard to trace back.
Sure. No, that makes sense. It's 3:02, so I know that there probably are some of the attendees that are having to move on to other meetings, but since we started just a couple of minutes late, there are only I think 2 or 3 more questions. So I wanted to go ahead and we'll stay on to 3:05 and address those. Before everybody leaves, I wanted to just remind you, like Will did, that please we would really appreciate any feedback that you could give us on the survey. We appreciate your candor and be honest with us about topics that you want to see, things that we can do better. We certainly appreciate that feedback. And then also, if you're interested in signing up for free trials of either the biodiesel monitor or the global biodiesel monitor or the global ethanol monitor, the links there are to where you can get signed up for free trials to those reports. So we'll go ahead to the last couple of questions. So the question is, what is the significance of tracking the boats in the water? Are the shipments not declared once they reach a U.S. port? Do they disguise the renewable fuel as non-renewable fuel? And so I'll go ahead and take a stab at that one, and then I'll flip it over to the team here to add some color on that. But the significance of the tracking is all about the timing. So we work to get out ahead of the shipments before they actually arrive into the U.S., well ahead of the customs data. So by using our proprietary technology, we can actually get the projected ship destination when we get the AIS signal as soon as the ship starts departing. And then we use knowledge base, that Ken and Will and Dylan have required to be able to understand, based on the trajectory of that ship, more certainly where it's going. We can also tell if it's been loaded or unloaded by looking at the draft change and other factors. So in terms of the imports, we really work to get that timing down and be able to tell well ahead of when it's arriving into the United States. And then for exports, there really isn't any kind of similar U.S. Customs data for that. There is aggregated data that comes out from the Energy Information Administration, the EIA, and also the U.S. Customs, but you have to wait until you get that aggregated data out from those agencies. So what we're doing by following the ships is actually doing that in a real-time fashion, being able to tell when things are loaded out ahead of those aggregated data sources. So that's the part of the big value proposition of the reports. Anything, Ken or Dylan, you guys want to add to that?
Just to address the question about does anyone, not report biodiesel? There's a lot of different names for biodiesel. Fatty acid methyl ester, B100, you can name it a lot of different things. I don't think anyone intentionally, and you have to report what you're importing into the United States, so no one's intentionally hiding that information, but understanding that information clear enough so that you can make sure that you can accurately predict what EIA and ITC are going to come out with is important. Also, the consignee is not required. You can fill out a form. If you're a consignee that does not want your name revealed, you can fill out a form. So that part of it can be hidden, but the product itself should not be disguised.
Got it. Well, we've had there's some few late questions, but I think we can answer those one-on-one fairly quickly. I don't want to keep anybody any longer on the webinar. We want to try to stay close to the time that we promised. So I want to just thank everyone for attending today, and certainly appreciate all the questions. Those really help us bring transparency to the things that people want to see in the market. I want to thank Will and Dylan and Ken. You guys did a great job. I was really enjoyed being on the panel presentation with you today. So with that, I wanted to wish everybody a great rest of the day that's on the presentation and call. Feel free to follow up with us with any questions that you have that you didn't get a chance to answer today, and have a great week.